So we know that the semiconductors are a key component of the NASDAQ 100. We know that NVIDIA has led the market. You could arguably say that has been the leader. Apple used to be the leader. I look at what's the hot play, what's the hot thing to be in, that's NVIDIA. But look at what we have on the SMH. Now remember, the SMH is the Semiconductor Index, or ETF. And what we have very clearly is we have a channel development, right? We have these pivot points all along here that, again, were giving us these perfect channels. Right to this gap fill, right to here, and look at what happened right there. You have a breakdown on the SMH. So, again, the NASDAQ broke down on Friday, the SMH broke down on Friday, and that leads me to believe that the entire tech sector is on thin ice here for a bigger move to the downside. All right. One other thing I want to point out here that's really, really important. So if we get rid of these lines here, and I just want to keep this simple, if you remember last week, one of the key things that I brought up to your attention was that we had essentially a pattern formation on the SMH that was eerily similar to that of Bitcoin. Okay, now Bitcoin at the top, mind you, the top of 65 to 69,000 in 2021. And so just to rehash this, and again, what you're going to see is you're starting to see how things I talked about earlier last week, by Friday we started to see things play out. And my goal here is to deliver real actionable alpha and in the very least make you aware of things so you don't get caught off sides. So here we go, right? So we have this obvious move up here, very Bitcoin-ish, right? Down move, that's your middle of the year for Bitcoin, except this is the SMH chart. So again, the SMH is the semiconductors. It's not Bitcoin. But the key here is understanding higher high than here. So lower high, higher high, just like Bitcoin. And then what did I say last week? I said, guys, be careful because you could start to see this playing out very similar to Bitcoin. Okay, so again, just to rehash, remember that M top pattern. And then if we flip over here and we go to the Bitcoin chart, here we have it, right? Here's your exact same pattern, and look at that higher high, right? Same kind of deal. And then look at where we've gone all the way down. So again, the reason why patterns repeat and why I use them to my advantage is because not because they're perfect. Nothing is perfect. I know I've said that a million times, but it is important to repeat. But patterns give you probabilities. Patterns are humans basically buying and selling. That's how charts are formed, right? Buyer goes up, causes up price, seller down, right? Buyers and sellers. And so ultimately, the fact is humans don't change. If you go back 5,000 years, 10,000 years, people were greedy at certain points and they were fearful at certain points. And so people were buying, they were FOMOing in, they had FUD on the other side. All of those things are here today. And that is why patterns tend to repeat. And that's why for us, we know that when patterns tend to repeat, we can utilize them to put probabilities in our favor.